What's up? What's up? This is Jamarcus Traham. Again, my name is Jay with the NBA on Instagram. And this is Money Mondays, episode 3. This is Life Insurance 102. Last week I did 101, the basics. This week I'm going to do 102. I'm going to just dive more into the difference between term life insurance and whole life insurance. All right? So, the main difference between them is how long are you covered? See, with term insurance, you are covered for a specific amount of years or a specified amount of years, specified number of years, right? And that's normally 10 to 30 years, all right? I'm gonna just run down term and then I'll switch over to whole life. For term, I'm covered for the specified years that I sign up for. All right. Excuse the glare that might be coming off their board. Okay. So if we're talking about cost, term insurance is normally cheaper. Normally cheaper than whole life. All right. As far as cash value though, there's no cash value in term life insurance, right? There's no cash value, right? And since there is no cash value, there's also no loans in a term life policy, right? So you can't borrow against it, things like that. But term policies are more user friendly. They're more straightforward, right? What you see is what you get. All right, they're easier to use. They're called pure life insurance policies, right? More easy to use, more straightforward. All right, but one thing I want you to know about term insurance is insurability. Because once the term runs out, it gets expensive after the term. So let's say you don't quite get in position that you need to be in financially. Once the term runs out, it'll get expenses. It'll get expensive after the term expires. All right. So what I suggest you do is, if you know you're not in position before the time runs out on your term policy, what I suggest you do is extend while the term is going on. All right? I suggest you extend while the term is active. That way, you'll protect against uninsurability. All right, you might be up in age, or you might have a health issue that you didn't have when you first started the term. And just some different things. You got to protect yourself against uninsurability. All right. As far as savings go, right? The goal for term is to self-insure with your own savings. Say, Jamarcus, what does that mean? Well, people pick term insurance, they just need coverage for a certain amount of time. I've given myself X amount of years to get my financial house in order. And once I get my financial house in order and the time runs out, I don't need the term anymore. Matter of fact, you can cancel the term early once you get yourself in financial position. So last time I talked about debt reduction, I talked about burial expenses, I talked about the different purposes for life insurance. So once you save up about 7 to 10K in your savings, for your burial expenses, I ain't touching that no more. That's my death expenses. Once all my debt is gone, I'm good. I'm getting older. I'm not gonna take on no new car, no new houses. Then you can do what they call self-insure, right? Or if you paid up your funeral expenses, I got my whole service paid for. I got the plot paid for. I got everything paid for. Well, there goes the burial expenses that you would have had. So you can self-insure with your own savings as opposed to whole life. When we get to the other side, people treat whole life like a savings account. All right. And just some last things to remember about term. If you're gonna get term life insurance, you need to buy level term. Some people call it guaranteed level term. Level term policy are policies where the premium stays level the entire time. Right? So you're going to pay the same amount each month the entire time. If you don't, they'll have annual renewals and your premiums will go up because, of course, you're getting older or you might catch a health condition that you didn't have previously. So always buy a level term. Your premiums are going to stay the same the entire time. All right? So that's a general overview of term insurance. Now, if we look at whole life insurance, there are some differences. Right? So you say, how long are you covered with a whole life? Well, for life. You're covered for life, all right? I'm assuming that you're going to pay the premiums, all right? So you're covered for the whole life. Now, the only thing is whole life policies tend to be more expensive than term. 9 times out of 10, your whole life policy gonna be more than your term. At the same face value, things like that, the same benefit amount is gonna be a lot higher on term side. On whole life side than it is on term side. All right. So if you're looking for which one is covers you longer, well, whole life will cover you longer. But which one costs more? Whole life costs more too. All right. It's cheaper for term. All right. Now, there is cash value, which seems to be popular amongst people with these whole life policies. All right? It does accumulate cash value. When you're paying your premiums, it does accumulate cash value. So some people say it's an investment account and a savings, it's an insurance account and a savings account put together. All right? The thing is, if you look at your policy, it's going to take a while for that cash value to rise. It might take 3 or 4 years before you accumulate anything in that cash value. All right? So be careful with that if you want to borrow or things like that. Right? Now, you can take out loans because it has cash value. All right? You can make retirement withdrawals, all right, for your retirement. And also, you can do what I think is smart. You can fund the policy out of the cash value. What do you mean by fund the policy, Jamarcus? I can take the cash value amount and use that cash value. I ain't going to go blow it. I ain't going to go buy this and buy that. I'm going to take that cash value and pay for the policy. So as it accumulates, I withdraw and let it start paying for itself. All right? That's a privilege that you have in whole life. You can fund the policy with the cash value. All right? The only problem that I see with whole life, another one, is it's more complicated. All right? You get more variables. You get universal life, this whole life, or you add these riders to this and this rider to that. Whereas term, for the most part, is pretty straightforward. You have some riders. If you don't know what a rider is a contingency, a clause that you can add on the policy. All right? There are way more riders on whole life side than there is on term. All right? Which makes it gets more and more complicated. Also, there's fees. So not only is it more complicated, but there are some fees on the whole life side, whereas the only thing you paying for on the term side is the premium. All right? The good thing is there is no uninsurability because you're going to have it your whole life. So as long as you keep paying the premiums, you don't have to worry about uninsurability. You don't have to worry about, oh, I caught this or I caught that and I can't get insurance. As long as you've been paying for it your whole life, you don't have to worry about that. All right? Another good thing is if you're treating the cash value like a built-in savings account. So there is some built-in savings. right? Um, Now, lastly, there are some things that I just need you to remember about whole life side. Just like on term side, you need to remember the bi-level term. Well, on the whole life side, I need you to remember that the surrender value. So if you surrender the policy, the surrender value changes with time. All right. So before you surrender the policy, you need to just say, okay, what is the current surrender value? Because it changes over time. Also, if you are taking loans out of the account and you don't pay it back, what's going to happen is they're going to take the death benefit and they're going to subtract the loan amount. So you need to figure out what that's going to be, especially if your people have pulled a loan out of that account. You need to look at that, and especially if they haven't paid it back, because whatever the death benefit is, the face value of the policy, you might as well subtract that loan amount from it, because they're going to take that out before they give you the rest. All right, so you need to know what that is. All right, so most people still ask, oh, Jamarcus, still, which one should I get? I know you explained the difference between them. All right, well, I would say this is my honest opinion. Term is for the people who are more financially responsible, who are doing what they need to do, their debt reduction, again, saving for their burial expenses, might have planned their own funeral, giving their kids their inheritance a different way besides through a life insurance policy, or they don't have anyone depending on them for income replacement, right? So that'll be more a person that's more fit for term, right? Whole life is for people that, man, I got this debt. I don't know if I'm gonna pay it down, or I can't quite save up enough for my death benefits, my death burial expenses. So I'm gonna go with whole life, right? So it just depends on your financial situation. Now, good news is there is a hybrid policy. I have it. It's a whole life policy, but when it comes to premiums, it has a 20-year term. So you can change the term amount. So basically, it's a whole life policy that I'm only going to pay the premiums for 20 years, and after the premiums paid out, I can keep it the rest of my life. Right? I have it for my sons, both of my sons, things like that. Well, all I did was multiply the premiums times 12. That's going to tell you how much you pay per year, and then multiply that number times 20, right? And you get how much you're going to actually pay for that policy. And as long as the face value amount is way higher than what you're going to pay over the course of the time, it should be a solid investment for you. So there is a hybrid. I don't know if every insurance company offers it, but there is a whole life policy that you are paid for on X amount of years. You're going to pay for it. Then after you're done, you keep it your whole life without having to pay anymore. So contact your insurance company if you're interested in that. But again, this is Jay with the MBA. These are the basic differences between whole life and term.